Well, let's head to Ghana now. The country has decided to ditch a 32-year tradition of securing loans from international banks to finance its cocoa crop for the upcoming season. Now, according to the industry regulator, the country wants to stop borrowing the annual syndicated loans and instead tap domestic sources to fund beans purchases from farmers in the upcoming season. That decision follows a Bloomberg report revealing that the world's second largest cocoa producer had been negotiating a bridge loan with major cocoa traders such as Barry Callebaut and Olam Group. This is after talks with foreign lenders for a $1.5 billion syndicated loan stalled. Now, the Cocoa Board typically secures a minimum of $1 billion annually to finance seedlings from farmers as well as other things. However, due to the country's debt restructuring and a decline in cocoa production, it could only borrow about $600 million last year. Well, let's delve further into how this is going to work out for the country. Joining us to give us more on the story is Jonathan Offei-Ansah. He's an economist and founder of the Africa Briefing magazine. Sir, great to have you on the show with us today. Now, let's start off with the fact that Ghana's Cocoa Board typically raises a minimum of about $1 billion every year from these foreign sources. Are there enough domestic sources to replace this borrowings from international banks now that it wants to change strategy?
No, I don't think so, because Ghana's domestic financial market may not have the depth and the capacity to entirely, replace the 1 billion typically raised, from the international sources. And again, the country's financial institutions may face challenges in providing such a large-scale financing at competitive rates, which the international lenders typically offer. But while there's a potential to gradually increase the domestic funding, it will likely require substantial reforms and development within the local banking sector, including increasing liquidity and creating specialized financial products for agriculture.
And just before we'll delve further into the impact, we know the regulator said it basically wants to wean itself from this annual syndicated loans. But we're also hearing that talks with foreign lenders have also stalled. So what really is the situation on ground by your thoughts?
Well, actually, the situation on the ground appears to be a mix of aspiration and reality. Because while the regulator's intention is to reduce reliance on foreign syndicated loans is clear, it still faces challenges in finding sufficient alternative sources of financing. So the talks with the foreign lenders are stalling. The fact that it is stalling could be due to several factors, like you mentioned, Ghana's debt restructuring, which has actually impacted the country's credit worthiness, and also even the fluctuating cocoa prices. Though I must add that there's a surge in the global cocoa prices currently, and also the overall economic situation in the country. And all this could place additional pressure on the cocoa regulator, the Ghana Cocoa Board, to explore alternative financing options through this transition, though this transition may take some time.
Now, earlier we were talking about the impacts this will have on the sector. What sort of impact will this absence of foreign cocoa funding have on Ghana's overall sector, Ghana's forex reserves, and also the economy? Let's delve a little further into that.
Yeah, you see, without access to this funds, Cocoa Board, the regulator, may struggle to finance the purchases of the cocoa beans for farmers and provide essential inputs like fertilizers, seedlings, which could reduce productivity and crop yields. And already this year's production has drastically declined, with only, I think, 429, 323 metric tons harvested, which is less than 55% of the average seasonal output. So this could lead to a decline in cocoa exports, which is, as you said, one of Ghana's major foreign exchange earnings and negatively impact the country's foreign reserves. So a shortage of foreign exchange could further devalue the cedi, which is currently trading at an all-time low of 16 to the dollar, okay, and contribute to inflation, thereby worsening the already overall economic situation.
Now, it is quite surprising because currently we're seeing cocoa prices rising rapidly on the global stage. On that note, what is the outlook for the overall sector in Ghana, given that, of course, as you mentioned, the cocoa crop harvest targets for this season, the 24-25 season, they've been cut by about 20% due to weather concerns. If you balance this out with the price of cocoa, what is the outlook for Ghana's cocoa sector?
The outlook, at least even for the 2024-2025 season, actually appears challenging, and because the reduction in harvest targets due to the adverse weather conditions actually indicates that production will be lower than expected, which could exacerbate existing financial difficulties within the sector. And again, the lower production may also reduce export volumes, impacting foreign exchange earnings and putting additional pressure on the economy. And this situation could underscores the need for Ghana to implement more resilient agricultural practices and diversify its sources of foreign exchange to mitigate the risks associated with this heavy dependence on the cocoa exports.